Hey everyone, welcome back to the channel, and here's a little Tesla update, because if you're like me that's kind of curious on what people have to say about the electric car industry and what's going on out there, one of the things I decided to do is do some little videos on stock market and investing. Now, I'm a realtor. I sell houses, I have revenue property. I think that's the greatest way to go. But I made a mistake a few years ago and lost all my money, so I have to start all over again. I didn't lose my properties. I just made a stupid investment and lost all my money. So I'm starting all over again. So I'm looking for opportunities, and an opportunity presented itself just a short time ago. And what was it? Well, it's called Tesla. Now, I'm sure you've been out there and you've seen all the fanboys, the now you know guys, the freak guys, the investing guys who post videos every day or every week or 3 times a week. Tesla, Tesla, Tesla. Buy Tesla stock. It's going to 5,000. I just want to let you know, they never put a timeline in there. That's like me telling you, go buy Berkshire Hathaway. It's only $20 a share, and it's going to $150,000 a share. Well, you could have bought Berkshire Hathaway at $20 a share, I believe in 1960. And it's, I don't know what it is today, I didn't look it up, but it's $200 and some thousand a share. So I guess I was right. I mean, I'm dead and gone because I made the prediction in 1960 and I was 50 years old. I'm not alive anymore. But hey, they don't give a timeline. They don't explain anything. They don't explain why. They have no understanding of the mechanics of how the stock market actually works. But I wanted to do this video to kind of show you. In my Liar, Liar, Pants on Fire video, I said, Liar, Liar, Pants on Fire, Tesla stock. The reason it was going down were 2 reasons. It's in the S&P 500, and the S&P 500 was down a lot. And Elon Musk had to sell all them options. Now, according to the filings that I have been able to find, especially the last little bit here in December of last year, and it's hard to get this stuff. I mean, I don't belong to some big bank. I think he pretty much sold out all those options that he had to do this year, last year, to create cash. And I believe it was somewhere around $5.6 billion in late November, early December, and that shot the price of the stock down. So S&P 500 was down, so there's pressure in selling, and that has nothing to do with confidence in the company. You people out there were posting videos. Gerber baby, I call him Gerber baby, that Gerber guy that's got an investment thing. He's got 40 billion under management. Tesla's got to do a buyback. Tesla's got a Gerber baby crying in his soup. Last week, it's the greatest thing in the world. You should go buy it. Like, come on. Either you know the fundamentals or you don't. Simple. And trust me, you need to be diligent and take profits along the way. You just can't go in and stay there like, oh, I'm just going to stay there forever. No, you basically lose all your money talking to someone who did it. And that's just all there is to it. So what did I do at Tesla? And I want to show this to people out there. If you're thinking of opening an RSP or a TFSA or something like that and having it self-directed, I can do better than those mutual funds. I can do better than the S&P 500. Well, an opportunity just placed itself. But I did not invent how to do this. I learned this from reading Jim Cramer's Mad Money books. And I've done this in my RRSP retirement savings plan and my outside retirement savings plan for the stock market ever since I read his books. So go get his books. The guy knows what he's talking about, and he's funny. So I wanted, Tesla was down, 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 down. And everyone was freaking out. Their demand is this, and oh, the excuses in the media. I can't get one where I live. They're sold out. They're incredibly expensive. They're sold out. They only make electric cars and they're sold out. Demand is, there's no demand. Are you kidding me? And the only reason they dropped the prices on their cars, and they're still making more than everybody, is because the politics said, hey, your Model Y doesn't qualify for a $7,500 government kickback. And that's all that is. It's the dumbest thing ever. They shouldn't have done it. Anyways, there were a lot better ways to spend $1 trillion. Let me tell you. So, what did I do? So this is what I did. So come in. Hopefully you can see this. Tesla. Look. Okay. So, when I started buying Tesla, as I said in Liar Liar Pants on Fire, it was at $200. So I bought 25 shares. I don't have a lot of money, people. I don't have $1 million lying around. Or $100 million lying around. Should have done this with options, but I don't know how to do options, so forget about it. So it was $200, and I thought $200 was always kind of my price. It'll go down to $600. They did a 3-for-1 split. I bought 25 because I knew the selling still had to go, and the S&P was going down. There was no one saying that it wasn't going to bottom out. But I was a little early. So then it hit 175, I bought 25 more. It hit 150, I bought 25 more. It hit 125, I bought 25 more. I wanted to buy a total of $20,000 worth. And then I figured it'll go to 100 and I'll buy the rest. Okay, 50, maybe 60 shares. It hit 110 and I was like, nope, I'm running out of time. And this is 110 price. I don't care if it went to 90. That, when you look at everything that they're doing, was a phenomenal dollar. If it goes back down there, I'm buying. Simple as that. So at 110, I bought 50 shares. And that filled my position of what I wanted to spend, $21,750. It went. Now, a lot of people aren't going to know what this means. But the stock was heavily shorted, and I mean heavily shorted. And when I found out this is one of the reasons I bought it at 110, I thought maybe it could go down to 90 or maybe even 75. And then I went, oh man, these shorts. I think some of these shorts are going to have to start covering. The shorts are going to be they got to cover. They're going to make a ton of money. They're shorting at, before the split, like $800-900. It comes all the way down to $600 is $200. Now it comes down to $300. Like, they weren't covering. So it ended up what happening? They had to cover. And of course, they reported record profits. But we all knew that was coming. We knew they were selling everything they had. And the price reduction made they sell double everything they have now. So you'll never be able to get one. They're still, where I live, $90,000. I think they're $65,000 in the States. So whatever. The price is the price. I'm not buying one. I have a Lightning. Way better. I don't care what anyone says. So, this is stock market. I bought all these shares. My cost was $21,750. It hit $212. My phone went off because I had a Google alert. I figured it out and I said, I'm going to sell at $210. If it hits $210, I'm out. If it bounces around in there, I'd still own it. And I set up a Google alert. My phone went bling. Tesla stock, $210. I was like, what? So I log on, and sure enough, it was $212 and some cents or whatever. And I went, sell, $212. And it got filled like that. Done. So I now have $31,800. And I don't own Tesla anymore. Now all the fanboys are out there, buy. It's going to 5,000. No. That's not how it works. That's just not how it works. But I made a $10,050 profit. Okay? Actually didn't make that much because I made 6 trades and it cost me $6 a trade. But I didn't put the cost in there. But anyways, made $10,050 for a 46.2% return on $21,000. And if anybody out there doesn't think that's just absolutely crazy, fantastic, I won the lottery, ring the bell. Now, I sold because 212 is 6 times it by 3. I haven't got my brain around that 3-for-1 split yet, so I times everything by 3 to really know, because my charts and everything that I did was before the split, and I haven't redone them with the new price, so I can speak in proper terms. So I times everything by 3, and I think You take that and times it by 3, it's 636. And I think that's too far. Too far, too fast. Shorts are covering. It's going down. It might go down a little bit, might go up a little bit. Today, it's at 190. If it never hit over 210, I'd still own it and I'd be happy. It can go all the way back down to 110. But under this scenario, I still would not sell, because that company's making money hand over fist with $23 billion in the bank. Now, don't get me wrong, their interiors of their cars suck. And their quality sucks. My Lightning blows it out of the water, and I just have an XLT. And everyone that gets in my Lightning that has a Model Y, like happened the other day, hope that guy calls me back because I want to do some videos with him. And guess what? Couldn't believe it. He just like was flabbergasted. XLT trim, way better than what he got. Way better. I'd say money probably. So anyways, thank you for tuning in. Remember, scaling into a position and something goes parabolic on you, if you were expecting that and wanted to stay in, stay in. I was hoping it would recover with the short covering and investor day. I'd get out in March sometime around my 210 price. I can now go into my main holding, which is TELUS Communications in Canada. That's T.TO on the Toronto Stock Exchange. It reported earnings and everyone was upset about them. I wasn't. There's a lot more going on there than what people want to know. Went down to $27. I took my profits and I bought that. I still have this to go back into TELUS if it comes back down, or another company. So there you go, a nice little stock market on how you make money in the stock market. Remember, you want to scale into positions. You want to make sure you have an exit position. Some of these things you don't want to own forever. I've owned TELUS for 22 years and the dividends reinvest. I have averaged a 5.2% return in dividends on that money every year for 22 years in an interest rate environment that's basically been zero. The stock price has averaged a 7% increase over that 22-year period. Do the math. I'm not going to do it for you because once you figure that out, okay, you're just going to go, wow. I still have Google alerts on it. I still read the quarterly reports. I own that company. I need to know what it's doing. You need to know what it's doing. Know what you own. You just can't forget about it. If you're going to be one of those, I bought it and forgot about it and lost all my money, stick with the S&P 500 index funds. Over time, you won't do as well as I do, but you'll still do fantastic. Now, I'm not a financial advisor. If you listen to anything I say, well, too bad. Do your research. Do your own decision making. I'm a firm believer that you should take control of what you're doing. And you don't need a lot of money. I made 46%. Profits go into my long-term holdings. I will use my $21,000 and I'll look for another company that's gotten beat up for no particular reason. Could be Tesla again. There's a lot out there. There are a lot of companies out there that get beat up and no real reason. But make sure they're companies that are in business and doing things. And go check them out like I do. Especially the Canadian ones. I go there. I'm not buying them until I know what's going on. I get in trouble all the time for it. So thank you for tuning in for this little video on don't believe the hype on Tesla stock. And don't believe all the crazy fanboys out there pushing all this stuff when they have no idea what they're talking about. No idea at all. Have yourself a wonderful week, and I'll see you in the future.